the big talking point, right? Brent crude falling below $90 a barrel. In fact, lowest level, a level we've not seen in over 7 months. Markets, of course, watching out for one, the Eurozone central bank's meeting on Thursday, and then the big cue from the US Fed on September 21st. The reason crude oil, of course, falling, as Nikunj was pointing out on top of the show, not for great reasons. Recession fears. And let's discuss that and more with Jonathan Barratt, who's now joining us live right here on the show. Good morning. Lowest price for crude since we've seen the outbreak of the war between Russia and Ukraine back in February. Brent below $90. For us in India, it's considered to be fantastic news. We're the third largest crude oil importer on this planet. Jonathan, I think the big question is going to be, we don't know yet the quantum of the hike on September 21st by US Fed, but can this possibly be the new normal for crude oil, below $90?
Well, good morning. Well, I hope it is, and I hope it also goes a little bit lower. But when you look at it, the market is very concerned, obviously, that the interest rate environment will see a recession, the high interest rate environment, and if we see continual increases, then that tips us towards a recession, which will obviously provide less stoke in terms of demand for oil. The other factor we're really focused on is obviously in China, as a result of the slowdown and some of the issues that we're seeing there. We can see that imports in China have actually dropped quite significantly, down about 1.1 million barrels a day at the same time. That was in August. So that's down about 9%. So we can see softening happening there. And combined with that, demand destruction is seeing the price under a lot of pressure. So hopefully we'll go lower.
Right, and a lot of the macros are, of course, falling in place at the moment. You have the resilient US dollar that has soared to a 24-year high versus the yen. You have the 37-year peak versus the sterling. Just look at the bond markets as well. Yesterday, you saw the dip. So we see that, along with what's happening with crude oil prices. What does it indicate?
Look, I think the US dollar and its strength has hurt a lot of commodities. We've sort of seen the likes of iron ore under a lot of pressure as well. A lot of our base metals under pressure. Gold's certainly under a lot of pressure. The US dollar and its strength is a factor that we have to contend with. I do get a sense that once that turns around, we will see some strength back into the commodities. But I think whilst the dollar is so strong, it is a concern. It can't last here indefinitely. It has to have some sort of turnaround. But so far, the numbers, particularly the export numbers we're seeing out of the States, aren't being affected. But when you look at it, the US dollar is something that really has hurt some of our commodities.
Purely from an India standpoint, I know you spoke about recession fears across the globe. It's just purely from an India standpoint, given the fact that you said you hope prices linger around these levels or become lower, how are you looking at it as a positive?
Look, I think generally lower prices will certainly relay the fear of that inflationary pressures occurring. I think generally some of the soft commodity prices have helped that. Hopefully it'll temper the interest rate rises that we'll see out of Europe and certainly we'll see out of the States. We are seeing inflation there for longer, and the more we get this short, sharp increase in monetary policy, then we'll sort of see this the chances of the economy starting to slow down. And as a result of that, that will lead into some of the commodity prices. It's still a real concern over there with what we do see in Europe, obviously with the Ukraine and Russia. But I think a little bit of an inkling there was what we saw in the natural gas price, where we saw natural gas price still hugely volatile, there's no doubt about it. But we're seeing signs that Europe is defying what's happening in Russia and prices are easing. So the macro picture is certainly very mixed. And I think the market at the moment is really focusing on those recessionary fears. And as a result of that, we're seeing, those prices, particularly for crude, sort of coming under pressure.
Many thanks, Jonathan, for putting that into perspective. Crude oil prices having crashed, what the implications are for recessionary fears as well for our own markets back home.